All right, guys, welcome back to the Independent Investor Channel. This is going to be a review of the Roth IRA account number 2. This is a self-directed account where the strategic goals in the account are tax protection until 59 and a half, and more importantly, wealth preservation. I own these free of charge, free of expenses, allows the money within the account to grow unobstructed going forward. So with that, guys, I'll drop you into the review and we'll begin. We'll take this opportunity to jump into the Roth IRA account number 2. This is actually my wife's account, so happy to provide some transparency. Some of the moves that we've made in here, not a whole lot to get too crazy, but it's been just performing really, really well. This account finally went back above 100,000 for the second time. The first time was a couple months ago. And since then, we've been taking a round trip all the way into the low 90s, and now we're back up, holding true on our positions, not panicking, not getting crazy. But in one screenshot, this is actually a great representation of what I consider to be a very mature portfolio. What you guys are seeing here is something that's been built out over time. It doesn't end up like this overnight, man. I mean, these accounts started with one position. They really did. And ironically, the one position that actually I started with is right here. It just jumps out at me, which at the time was Kraft. And that was when they were with Mondelez. And that was my first stock in this account. Now, I've bought and sold this a couple times within this account. Kraft has really gone through a restructuring, and it's a buy right here, absolutely, for all you dividend investors to jump in here. And Kraft has just been silently performing quite nice, up about 10%. And, it's been paying a nice dividend, and it just gives me a nice round out of some staples exposure. But couldn't be happier, really, with the performance of this. I do have some spec play at work in here, so we'll get to that. There's an attempt to try to grab a lot of dividend, being the paramount goal of this account, and some international exposure as well. I do that strategically in this account. I did render profits in the S&P 500 here, having run up. I established the position when the market was at its low. I went ahead and exited the position, not necessarily because I felt like the S&P 500 was overvalued. It was more of a restructuring and an opportunity to enter into a little bit more of a spec play. I do own S&P 500 exposure elsewhere, so just keep that in mind, guys. I really think that a takeaway for new investors, always need to keep that S&P exposure at a nice level and just keep that passively growing. But I was up enormous in it. It had run really nicely and given me some nice entry into some of the more speculative play that I want to put. And if the spec plays work out, then I'll actually roll that back into more value when I render profits there. Since those profits are being rendered within the Roth IRA, they are tax-free. So just to roll through this quickly, Cisco Systems went through a pretty good downturn. This indicates that I've actually bought more. I bought 20 more shares. Why not take advantage of the downturn a little bit? It's come down off of the high 40s into the low 40s. So just a nice way to increase my my exposure here to the largest tech space that I have in this portfolio. Cisco really is the cornerstone in this. Just excellent value in this company. I think it's right at 16 times. So fantastic opportunity to grab Cisco right here. I did go ahead and liquidate Corteva, DuPont, Demours, and Dow. The reason why I did that is to try to trim some of the underperformers out of this portfolio, clean it up a touch. Was a result of a 3-stock split from Dow DuPont at the time, and I get my materials exposure in other fashion. I just think it's better for my materials exposure to just grab it through the ETF, and that's what I choose to do. So it freed up a touch of capital to put to work in different ways in this portfolio. I'll try to earmark those for you guys. Facebook right below it is probably one of those ways to grab a little bit more exposure in a different capacity. But Chevron, we're definitely holding there. Nice dividend payer. I'd like to add to this position. This is probably one of the best buys, I think, right now in energy. So Chevron, just continuing to hold long on Chevron and oil. I don't mind owning that in the least in here. And then Facebook is a nice position that we've added into the Roth here to gain me some growth exposure. We do have a little dab of exposure in the other taxable in M1 Finance with Facebook, but this is nice. Grab some growth exposure within the Roth here. Goldman Sachs and financials has really done well. Give me some dividend exposure in the financials. So we've added a 15 share block there. Honeywell, one of my absolute faves, has really been underperforming and has come all the way back. But Honeywell is a nice company. I'll own that long in here. JP Morgan is the flagship holding in financials in this portfolio. It is the number one bank, in my opinion, to own. I will be looking to add more to this position. I missed my window in the 90s. There's no doubt. I really wanted to add to it, but there was other positions that I opted for. That's totally fine. I already own a nice base position in JP, and we'll continue to add those going forward. I have no problem adding these at any time. Just a nice cornerstone in financials in this portfolio. Kraft, I've already talked about. It's been doing quite nice. Lacandia Holdings, this is the golden nugget for Tita SPAC. LCA is the ticker symbol, and just a nice little spec play in here. It's fine. It's off its original where I bought it. That's fine too. I don't expect magic out of these holdings. I am going to hold it until it merges, and we'll be interested to see how it reacts. I think the prospects for this company are actually quite good. And we'll have to be patient on this. Okay, this isn't going to happen overnight if they're still working on the actual merger. So we'll wait until that finalizes. 3M is probably the flagship holding in industrials in here, minus the SPAC play, which is Tortoise Acquisition Corp, which is going to be highly on once they complete their merger as well. That's actually the largest holding in this portfolio. Which is fine. I wouldn't do that typically if this was a standalone portfolio, but this position is held in reference to the total overall size of the portfolio. This is probably a little bit over where I would consider my comfort zone, but it speaks to the conviction that I have in Hyliion once the merger completes and they're open up to institutional buying. Within the investment community right now, institutional investors cannot buy the company. It's a very unique way for small retail investors like myself to enter into the company and hold the shares right alongside the board members. And very high private ownership of this right now. And I'm very excited to enjoy some of that appreciation once this merger becomes final with Hyliion. Right now, it's the SPAC company that owns it, Tortoise Acquisition Corp, which is awesome. So the prospects of this has been really great, and we'll continue to hold that. All tax protected within the Roth. I mean, I'm up a little over 1,500. I'm really not too concerned with this at this juncture. I mean, this could go up $10 next week, and I wouldn't bat an eye. Just for your own awareness, if you're tuning into the video for entertainment, I do actually have a sell order right now on 500 shares of Hyliion at $85 a share. So I'm looking to render, and if you guys want to do the quick math on that, you can. If not, I'll just tell you. It's about $42,000 of profit. So that's what we're aiming for there. We'll retain the 100 shares if it does go to $85, which I think eventually it will long term. Great. Then we own 100 shares for free, and we take our $43,000 bill and we make a YouTube video about it, and we explain the trade and explain the investment and explain my thoughts surrounding why and how we kind of came to that decision. But nonetheless, we're happy with waiting on the position and excited about the addressable market that they're going after. All right. Merck is one of those buy and hold forevers here. And we own Merck here for a long time. Nice 50 share, nice big position there. Man, it pays a nice dividend, and just can't complain about this. Realty Income Core, this is an interesting position in this portfolio. Holy moly. What can I say? Wow, this company is incredible. I would like to double this position, to be honest. I think this is a little bit light at $6,000 in this. I would love to take advantage of this opportunity right here at $60. You know, the optimal buy through the volatility would have been, you know, in the low 50s. For those of you guys who got it in the 40s, you won the lottery, because this company is just a money-making juggernaut. It's incredible. It pays shareholders. It's a monthly dividend to boot. I don't even care about that, but man, it's nice to be paid every month. It's crazy. So I'd really like to work on this position. It checks all three boxes for me as far as capital appreciation, good entry. You're going to have to pay up for these REITs. REITs, from a price to earnings perspective, you're going to have to pay for quality. It's that simple. Realty Income being kind of the top of the quality spectrum there. But love owning this company within the Roth IRAs. These dividends are unqualified when they're paid. All right. Pepsi, what can I say? Fantastic, diversified business. One of the largest that I have in the staples space in this portfolio. Pays a great north of 3% dividend. And one of those cornerstones that are just, some of these positions are just buy and hold forever. They are solidified positions, and we'll continue to own them strong. Next is Pfizer. 50 shares there. Another buy and hold forever. Procter & Gamble. Again, same idea. Next is Philip Morris. Wanted to grab some more staples exposure. Philip Morris, man, a fantastic dividend play, so that kind of emboldens the dividend payout here at $85. We've already talked at length about the SPAC performance here of Hyliion. It's an aggressive investment. It's not one that I would recommend for all investors. As a matter of fact, I would recommend this investment for the least amount of my audience, to be honest with you. As bullish as I am on the name, you have to understand that I own Tortoise Acquisition Core with a lot different expectation, a lot different strategic rationale, as opposed to owning Procter & Gamble. Completely different hat that I wear to justify owning PG as opposed to Tortoise Acquisition, Hyliion. Okay, so just to understand, it's the psychology behind the plan that makes more sense than anything, guys. But if you're looking to buy into this to get rich and retire overnight, you're missing the point. Okay, Travelers here in the financial space, insurance. So that's one of the longs, Dow component. Travelers, we're going to own it long in this portfolio. Nice 3% yielder, and great to get that established in here. Visa here at the bottom in technology, so kind of rounds out and gives me some growth exposure. It does have a nice dividend growth rate. It doesn't have a very nice yield, but at the same time, Visa makes money hand over fist, and great buy and hold long. Vanguard's developed markets is Europe, so we own a nice 100 share block in that diversified product. That's come back nicely. I've already talked about the VOO liquidation, took huge profits in it, and happy about that. I was able to leverage those positions into some of these others that I've declared to you already. Verizon in the telecom space. Wells Fargo, I'd love to buy more of Wells Fargo down here, just continuing to hold the shares long. And finally, Walmart, which is probably one of the best in breed in this portfolio right now at $132 a share. So Walmart, that rounds out the Roth IRA account number 2. Hope you guys appreciated this review. We'll kick you back to YouTube to conclude the video. All right, guys, so we've come out of the Roth IRA account number 2. This is a self-directed account for my spouse. This account also has surpassed the $100,000 milestone. So very, very big milestone, entering into that 6-figure realm. Very excited about that. Guys, I hope you appreciate the transparency that we put forward. You get a lot of ideas about what holdings I specifically own, how I own them, and also some of the passive investments that I also own. It gives you an idea of what you can do as well, what is possible in investing. Guys, if you enjoy the message that we have putting through, you want to make sure and subscribe to the channel, hit the notification bell for us, leave your comments at the bottom of the video, share the message with anybody out there that you know needs some introductory information on the stock market and taking control of your own future earnings. This is super important for people who want to take control of their own personal finance and they just don't know how. Bring them on the channel. We'll show them how to get it done. Guys, thank you so much for tuning into the message, and good luck in your investment future.